If you guys can actually master supply and demand, and I mean actually master it, not just draw random boxes on a chart, you're going to be able to trade with the large institutions, find big risk to reward trades, and build consistent profits. But here's the thing. I see traders every single day trying to use supply and demand and doing it incorrectly, doing it completely wrong. They just draw zones on charts off of vibes, and they don't understand what actually works and why these zones work. And when a zone fails, they just move on and draw another box like nothing happened. It's not a strategy, right? That's gambling with extra steps. And I've been trading ES futures for over a decade, literally over 10 years. This year's my 11-year anniversary, I guess. And I've traded live in front of hundreds of my students for 3 years every single day. And supply and demand is the backbone of everything I do. In this video, I'm going to show you guys exactly how I draw these zones, why they work at an institutional level, and how to refine them across multiple different time frames, and how I use order flow and volume to confirm whether a zone is actually worth trading. Let's just get right into it. Supply and demand zones explain. This is why institutions and how institutions move price and how you can actually go about trading it. And again, I have over 10 years of experience doing this. But why price actually ends up moving for us. So the classic, more buyers and sellers explanation is kind of wrong when you think about it in the deep end. Every trade requires a couple things, right? Both a buyer and a seller to agree on price. This is what actually drives movement. It's something completely different entirely. So a balanced market, right, where we have buyers and sellers agreeing on price, orders getting filled, price consolidating sideways, and nothing explosive happening yet. Then we have an imbalanced market. When one side overwhelms the other, price move fast and aggressively to find liquidity, and that's the explosive move. This is what we use in combination with each other in the market, going from balance to imbalance to actually draw our levels and find out exactly where we need to place our trades. This is the core concept, right? Balance versus imbalance. So consolidation after orders being filled. This is where the setup happens. And the big move, right, after the zone or after the consolidation, this is where the zone is being created. And again, the origin of this imbalance, the consolidation, is the pinpoint. This is where you want to look for your buy and sells. Now, the golden rule is the consolidation before the big move is your zone, right? We've been doing this for a while. If you're brand new, maybe you don't know this, but this is where your zone actually ends up being drawn. Now, the quiet siders action isn't boring. Most people avoid even participating in this. It's where institutional orders are being loaded. You'll usually see a lot of volume and a lot of one-sided orders being filled because this is where people are positioning themselves before a big move. Why do these zones hold institutional money? So big players can't fill a 10,000 contract order at a single price point. There simply isn't enough liquidity at that one level, right? Number one is order starts to fill. So institutions begin executing at the origin of the zone and price starts to move. Number two is the position is incomplete. So the first move didn't fill their entire position. Unfilled orders are going to be remained at that level. And we can actually see this with order flow. And number three is price returning. So when price pulls back into the zone, institutions are waiting to add. This is why zones get respected repeatedly. And when they break, it's a massive shift in overall structure of the market. So this is how you're going to be drawing your demand zones. Number one is find the move. And this will be obvious momentums up and down for me personally on the 30-minute time frame. Number two is identify the origin of this move. So we're going to locate the consolidation or neutral candle, just neutral period on the 30-minute, right, before the rally. Number three is going to be marking the zone. So top is going to be the top body of the consolidation. The bottom for demand is going to be the bottom wick of the consolidation. The mirror rule, right? The demand is the exact opposite of supply. It's the same process, but reversed. The wick is going to anchor the bottom of demand, just like the wick is going to anchor the top of supply. Now, time frame drill down. So what I do for these levels and how I trade every single system is, first things first, the 4-hour market structure. So is it bullish, is it bearish, or is it balanced? Then I go on to the 1-hour time frame, because sometimes you'll see levels on the 4-hour, on the 1-hour, on the 30-minute that you won't see on different time frames. So a lot of times I go down to the 1-hour, I'll refine the zone. The level is going to shift and tighten up as you zoom in a majority of the time. Then the final zone for me will always be on the 30-minute time frame. This is for a major reason. I'll show you some examples right now. To show you a little example here on NQ, on the 4 hour, we find the overall trend in the market. You might honestly see your zone of the 4 hour as well. So we're just going to draw up an example. Then I go into the 1 hour and I'll look to refine it. Sometimes zones in the 4 hour won't be in the 1 hour and vice versa. So right now, obviously, we don't see a good zone, not an explosive move up. Actually, the explosive move up is right here. There's also one right here. Let's just use this for an example. You have a little bit of a neutral period before this big explosion up. Then I'll finalize the zone, right? I'll make it absolutely perfect on the 30-minute time frame, and that's where I will draw my zone. This will be my demand, and for supply it's the exact opposite, right? It's just going to be the candle, the top wick, and the bottom body. For demand, it's the bottom wick and the top body. Now on the 5-minute is where I look for my entry triggers. This is where I press the buy and sell button. The structure shift confirmation only for the A plus setup. So I do sometimes, if the market structure in the 4 hour is super bullish, I sometimes don't wait on a structure shift. But if you want that A plus setup, if you want to have the highest win rate, the structure shift will show on the 5-minute time frame. Now, sometimes I drop to the 15-minute time frame. So if we see like a massive move on the 30-minute, there's no zone in between. So no good example, but sometimes we'll see this, right? I'll just draw it up for you guys. Is on the 30-minute time frame, we'll see a big move up with no zone in between. Then we drop into the 15-minute time frame, and on the 15-minute time frame, on this big move up, we'll have a little bit of consolidation before this big move up, and that will be a valid zone for me. Now, I only do this if there's a big move up, 100 plus points, and no zone in between. That's when I'll zoom into the 15-minute and actually mark up those levels. Now, the 5-minute structure shift for me is simple, right? Because let's say, for example, the 4 hour, right? The 4 hour is bullish, right? We're up, 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 up. Then the 30-minute, we're looking for longs off demand. The 4 hours bullish. We have a demand level right here. The 30-minute will then be selling off right into demand. And then I zoom into the 5-minute as we approach demand, and I'm waiting for that higher high, and I'm waiting for that higher low to enter off that 5-minute structure shift off that higher low. Now, 4 hour structure shift, right? The only filter that matters first, and this is super key to finding A plus setups, is playing with the overall trend on the market. Bullish is 3 higher highs and 2 higher lows. Longs only off demand zones, like this example I just showed you. Bearish, 3 lower lows and 2 lower highs. Shorts only off supply zones, right? And also for bullish, we'll play break retest of supply, and for bearish, we'll play break retest of demands. Now, balance markets, right? Equal highs and equal lows, we'll play the range only, top and the bottom. So for example, I'll show you this, right? If the 4 hour is ranging, right? We have a range of the 4 hour, 3 equal highs, 3 equal lows. I'll look to short the top and long the bottom. But I'll also look for break retest of demand and supply to play with the range, meaning that if we bounce off the range from the top side, I don't see a short here, but there's a demand in the midpoint, I'll wait for that demand to be broken, retested for a move back to the bottom of the range. Same thing on the other side. If we bounce off the bottom, there's a supply zone right here. I'll wait for a break retest of that supply zone to play in this range going to the top of the range. So I'll play the range only. And if the structure is unclear on the 4 hour time frame, all I'm doing is sitting out of the trades. I'm sitting on my hand because the higher time frame will always win. Never fight it and never short all-time high. I had to throw that in there because we are in currently all-time high condition. The next thing is the confirmation layer, and I use volume heavy for this. So for example, the volume profile is going to reveal where most of the volume was transacted at each specific price level. It separates a good zone, right, from a great one. Now, if there's heavy volume inside the zone, right, heavy volume inside the zone as we're forming, as we're getting back into it, it's a strong zone confidence. So if the volume in the zone is significant, it adds more confluences to that level because that was volume, just participation, right? There's more participation in that level versus less volume. It's less participation. And you can also use that as we're approaching the key level. So right here, down here, obviously you have the volume bars. You can watch whatever kind of volume you want to see. And let's say we have 2 zones marked out. We have, supply at the top and we have demand at the bottom. Now, let's look at it like this. If I'm looking for longs and we're moving into demand and I see volume spiking up, getting higher and higher and higher, I can most likely expect a continuation. This is how you kind of avoid getting faked out from levels. If we're moving into demand and I'm looking for longs and we're seeing volume get smaller and smaller and smaller, less participation in the zone, it's a great indication of a reversal. And I will use this as an extra confluence to take longs. Now, kind of it's the opposite of like when the zone is forming. So if we're forming the zone, like right here, for example, we're about to shoot up and I see the volume spike up as we're forming the zone, that gives more confidence to the zone and makes the zone stronger in my book. Now, the basis of Bookmap and how you can use these for actually playing off of the zone. So, Bookmap is going to show you the live battle between buyers and sellers at any key level. And I recommend you guys starting off only look at Bookmap inside a zone or inside a key level. The green bubbles are obviously going to be the aggressive buyers hitting the ask, the real conviction of buying, the market orders. The red bubbles are going to be the opposite. They're the aggressive sellers hitting the bid, right? The real conviction of selling. And the orange lines above are the passive limit sell orders, and the orange lines below are the passive limit buy orders. So they show you the intent of the market. In a supply zone, right, passive sellers are going to be stacked inside the zone. This is just confirming institutional money. This is your green light to back up a zone. So now we're not just going to be playing off of random levels, right? We're going to look at Bookmap. And on Bookmap, do I see a vast majority of orders sitting inside supply, right? A big limit order sitting here. That will confirm to me, okay, that the move that formed this zone, the aggressive move that formed this zone had all these orders being filled. And now as we're coming back into the zone, there's still a lot of orders sitting there. So that confirms to me that there might be a significant reversal depending on the reaction and on the follow through. And you use this in combination for your entry trigger with exhaustion and or absorption. So the first sign a zone is going to hold is exhaustion and or absorption. So exhaustion is showing aggressive buyers sellers entering the zone with decreasing size. Each wave smaller than the last, the attack is dying, they're running out of ammunition. A great way to put it would be like this, right? As we're approaching into that key supply level, right? And we are seeing all these level 2 orders stacked. But as we're getting in there, the aggressive buyers are getting smaller and smaller and smaller and basically disappearing. They're getting exhausted. Aggressive buyers don't want to transact at these higher prices. And we have all these passive orders sitting here. So for us to actually break this and not reverse, we need to see big aggressive buyers, not smaller and smaller and smaller. Great indication for a reversal. The next thing is absorption. One large aggressive participant hits that level hard and price doesn't move up. A passive wall is sitting there soaking up every order. The zone is holding its ground. Either of these, right, is the first sign the zone is going to hold. This is what we wait for our actual confluence. Like, it's 100% needed to actually take any position, both continuation or against the structure. But absorption will just be, we have all these major orders sitting here. We come up and we hit it with a massive order, but price does not move up. And then you see more orders coming back and spitting back out, defending that price level. The next thing, right? The entry trigger. So this is the 5-minute structure shift that I talked about. You're not going to enter off hope. You're going to wait for exhaustion. You're going to wait for absorption. You're going to wait for an aggressive follow through. But if you want your win rate to be significant, especially if you're trading those prop firms, wait on the 5-minute structure shift. You'll take less trades, but you'll win majority of them. 3-step logic, right? Longs off demand. Exhaustion or absorption from sellers inside the zone. The 5-minute chart prints a higher high and a higher low. So after I see all this stuff right here, I'm waiting for this to happen. Then a new higher, or for shorts, for example, like for longs will be the opposite. But I'll just give you an example for shorts since we already have this drawn out. I'll wait for a new low, new lower low, and a new lower high, and I'll then get in off that lower high after I see all this crazy mess in there that my drawing absolutely sucks. Once we see that, right, I then wait for an aggressive order to take place. So it's the same thing, but backwards for longs and shorts. So basically, after we waited for all of this, let's say, for example, we have our orders. This is for a short example. We have our orders sitting here. We see price come in. We get massive absorption. And we get more orders defending. We then print that new low and a lower high. I'm looking for that entry here. Then all I need to see for my entry, right, is having a passive buyer underneath us. That passive buyer getting filled by an aggressive seller, and then an aggressive bid below. And once I see that, I'm automatically in. It will look something like this. Let me see if I can find a real-time live example. This would be an example for longs, right? Let's say, down here, I saw the exhaustion from sellers, whatever it was. We saw that lower high or that higher low for this long example. We then fill a passive buy offer, a passive sell offer with an aggressive buyer, and then make an aggressive bid above, clearing these offers. And that's when I would press that buy and or sell button. Same thing for both sides, just flip-flop. So for shorts off supply, what I just showed you, we'll wait for exhaustion, we'll wait for absorption, and then inside the zone, then we wait for the 5-minute chart to print a lower low and a lower high. And that first aggressive sell that fills a passive buy offer, right, and makes it an aggressive bid below, I will press sell. So stop loss and take profit. So stop loss has to be where your thesis is wrong, right? The market doesn't care about how much money you want to lose. It cares about price. So if you're putting your stop loss at random dollar values, like I only want to lose $100, I only want to lose $200, it's different. It's very, very different. So what you guys want to do is for longs off demand, put your stop, right, below the low we put in the zone. So for long and off demand, my stop will be at the low we put in the zone. If we're shorting off supply, my stop will be At the high, we put in offer supply. That's simple. Target. Now, for a majority of my targets, I do hold runners a lot of times. First take profit will always be VWAP, which is a volume weighted average profile of this blue line right over here, which you can see is pretty well respected depending on the session and the time frame. But majority of the time is respected. I take my profits out at VWAP. And if VWAP is, for example, right, let's say we're looking at longs off of a key level. Let's say we're looking at longs off demand. We bounce off demand. We're looking for longs, and VWAP is underneath us. Let's say this line is VWAP, this line is price. Then I will target the last high. Same thing for shorts. Let's say VWAP is right here, right? Or sorry, not right there. Let's say VWAP is sitting in supply, and we bounce off of VWAP for shorts, and I'm in short. So with VWAP above us, I will then just target that last low, right? Pretty simple. Again, the market does not care about how much money you want to lose. It cares about price and price only. Zone invalidation. A lot of people have struggles or struggle with zones and invalidating the zones, but the price closes above below zone, a 30-minute chart. For me, the zone is dead. I'm not going to trade it again. I'm going to move on. And we have a lot of examples actually showing up here that we can just look at N and Q. So we had a zone, right, on NQ, had a demand zone right here, right? If we draw the line at the bottom of the zone right here, we close underneath that on the 30-minute time frame. So this zone is now invalid for me. Fresh zones matter. So most institutional orders, right, are still intact if the zone is more fresh. It's going to give you the strongest reaction, and it's expected. I mean, old zones still work, but the majority of them work better if it's a fresh zone. I still treat them the same way, but I've noticed the win rate is significant for fresher zones. And use zones. A lot of times you'll see a zone get tested over and over again. The orders are going to be depleted, lower probability, so the edge is going to be gone. And I don't necessarily skip it completely. And a lot of people think like the more the zone is tested and held, the stronger it is. And this is what order flow needs to come in key, because as we are, let's say we have a key demand level, right? Let's say we have a key demand level right here. And price comes in and tests this zone multiple times. It tests it one time, we move up, tests it again, we move up but lower, come back up, test it again, then move up but lower. And every time we're testing the zone, we're giving like a weaker and weaker move up, and the volume is getting greater and greater as we're moving down. This zone will then invalidate itself for me. And very important to watch order flow and volume as we're approaching a zone to gauge whether we're going to respect it or not respect the level. Fresh zones, there's going to be more orders. So like watching the amount of level 2 orders sitting at the zone as well to kind of give you a good idea if we're going to be broken or not. And I want you guys to cherry pick the best zones, the strongest zones, the freshest zones, and really give yourself the best possibility and the best opportunity to take these A+ setups by cherry picking. You got to cherry pick your trades. You really do. You really, really do. The mistakes that's going to kill the most supply and demand traders is most traders don't fail because the strategy doesn't work. They fail because of execution errors they keep repeating. So there's too many zones. If the zone isn't screaming at you like this is the obvious zone in the world, skip it, right? Over marking's going to kill your edge. You're going to have zones everywhere. Focus on those big, obvious zones. Fighting the 4-hour trend is next. So the higher time frame is always going to win. Always going to win. Never trade against it, especially if you want to only go for A+ setups on those prop firm accounts. You only need 5 days to get a payout. Stick with the overall trend. Be patient. Don't just take a trade because you see something happening. Wait. I never short all-time highs. It almost never works. It'll work, once in a blue moon, but majority of the time it never works. So just stop doing it. Ignoring zone invalidation. If a zone is invalid, it closes underneath in the 30-minute time frame. It did that for a reason, right? The win rate of those zones drops. Ignore it. Stop trading it. And no order flow confirmation. Don't just take a trade because we bounce off a zone or because we're in a zone. Wait for all the confirmations I just told you in this video. Now, the full process, every single day, follow this. Number 1, 4-hour, read overall structure, right? Bullish, bearish, or balance. Number 2 is the 1 hour where you start looking for your key supply and demand zones. Number 3 is a 30-minute time frame where you finalize those zones. Number 4 is volume and Bookmap. Confirm with the volume profile. Are passive orders sitting in the zone or not? Number 5 is wait on that 5-minute structure shift, the higher high or that lower high. And number 6 is entry and management. So execution and absorption is going to confirm. You're going to wait for that aggressive fill and follow through, and then you're going to execute. VWAP is going to be the target if it's not above or below you. If it is, target the last low or last swing high, and stop at invalidation every single time. Anyways, guys, if you want to go deeper into all of this, the exact zones I'm drawing every single day, the order flow confirmations I use, how to use volume to size up, the full process, live in real time, that's what we do inside the mentorship. So me and my analysts, I go live every single day. You see the zones are marking, every entry trigger we're watching, every trade we take every single day. It is closed. I get a lot of you asking me, It's currently closed. There's no spots available. I'm focusing on the current group of students, making sure they have success and graduate. But once they graduate, we'll be opening it up. And honestly, this is how I do things. I'm one person, can't cater to everybody. So we do have to keep the group closed, a majority of the year, to be honest. But if you want to be first in line when we open back up, join the waitlist below. First people on that list get the first look, right? If you're not on that list, it'll probably be a while till you can join. No pressure. If you're serious, you know what to do, guys. I'll see you in the next video. Hopefully you enjoyed. Leave a like, subscribe, and peace out.